think particularly if we see the Clarity Act gain momentum and become a fait accompli, I think the market starts to rally. That could lead to Bitcoin 150 by the end of the year if we see rapid progress on it. Um, More broadly, I think the market will forget about the 4-year cycle at some point in Q1, and we'll start a significant march upwards. There are just too many gale force tailwinds to keep the market down. Institutional buying, uh, amazing regulatory progress, a new ICO market, better tokens, it's approvals on Morgan Stanley. I mean, there's too much money that's going to come into this system to keep it down for long. So I look at this period as a gift to long-term investors. I'm taking advantage of it. That doesn't guarantee it will go up, but I do feel that way. Once we sort of put the worries about a 4-year cycle to bed and start reflecting the fundamentals of the space.
When you stop viewing Bitcoin through the old 4-year cycle and start seeing it through institutional flows, the entire market suddenly looks very different. Matt Hougan is the Chief Investment Officer of Bitwise Asset Management, and after listening to his latest analysis, you begin to see the crypto market through a sharper institutional lens. Hougan reveals that Bitcoin's current behavior has far less to do with its historical 4-year cycle and far more to do with structural flows, especially covered call selling by long-term holders seeking yield without triggering taxable events. From your perspective, this hidden sell pressure explains the sluggish price action despite strong fundamentals. You also find his comparison to Facebook's post-IPO consolidation compelling. It reframes the current sideways market not as weakness, but as an accumulation phase for patient investors. More importantly, Hougan's framework of on-the-run versus off-the-run crypto assets highlights a crucial structural divide. You agree with his view that Bitcoin, Ethereum, and Solana now sit at the center of institutional flows, while the rest of the market struggles without a clear marginal buyer. His insights on Solana's ETF strength, equivalent to $12 billion in Bitcoin terms, further reinforce the idea that institutional allocation patterns are becoming the dominant force in crypto valuation. Finally, Hougan's expectation that Bitcoin could reach $150,000 if regulatory progress accelerates aligns with your own belief that fundamentals are rapidly overpowering outdated cycle narratives. If you found this perspective valuable, drop a comment, share it with fellow investors, and subscribe for more sharp, data-driven crypto insights.
There is a huge amount of covered call writing against existing Bitcoin positions because they don't want to realize the tax loss. And I think that's where a lot of the selling is actually happening. It's people selling the upside of Bitcoin, which is, from a supply perspective, the same as selling the asset itself. It just doesn't mean that the asset moves on chain. I underestimated it as well, right? It turned out to be a very big deal. I also think there's something reflexive about it. I think some of those holders may be remembering the 4-year cycle and thinking like, boy, I just can't go through that again. I think ETFs are it. I love that piece. That was an important piece for this space. I think it really set the narrative. If you haven't read it, you should go read it. The thing that people miss about it, though, is they make these analogies to like Facebook's IPO and how Facebook traded down for 15 months from its IPO. But what they leave out is since it's gone from $38 to $650 a share. And I think that is the piece that I've been focused on. That's what turns this sideways chop into a gift instead of a challenge for those of us who are looking to hold for the next 10 years. I think the IPO analogy is correct, but I think you have to expand out 15 years to see how a story like Facebook or a story like Coinbase is playing out over time. Because the other part of that story that's not being told is take an asset that's not Solana and has the same selling, but does not have BSOL buying it, right? That's what's happening in the rest of the market. That's why, there's going to be, in the bond market, there's this idea of on the run and off the run treasuries, which are the treasuries everyone's traded at a different price from the illiquid other treasuries that are sort of outside the norm. You're going to have that in crypto. You're going to have on the run crypto assets that have ETPs that are getting bought by institutions, and then you're going to have everything else, and there's going to be a spread on valuation. And if you don't have institutions moving into your asset, who is the marginal buyer, and when are they coming? I think that is a a reasonably hard question to ask for some of the deep altcoins, and they're suffering as a result. Huge thirst, particularly assets aligned with stablecoins, tokenization, or DeFi. I think all three of those categories are going to have really significant inflows. When we go speak to institutions, I did, let's see, 3 calls today with advisor networks
Covered
that had,
calls. 3
yeah,
covered
no,
calls.
with folks who had, that's right, too much of that. No, with folks who have a couple billion in assets, and every one of those calls, half the time is spent on Bitcoin, half the time is spent on stablecoins and tokenization. So those are the 2 things that are getting discussed with financial advisors and institutions, and it's about 50-50, right? And then what that tells you is they're going to allocate, and actually they're going to overweight coins that are linked to stablecoins and tokenization, because they're hearing that these are the 2 big things. So that means Ethereum, it means Solana, maybe it means some other assets, right? We will see. But I think those 2 particularly will get a bit. You know, the thing about these folks is a lot of them like to think they're clever. And so the idea of a challenger asset like Solana that's faster, easier to use, it's like not only can they tell their clients that they know about crypto, but you know, it's not just this Ethereum thing. Yeah, it's the big leader, but there's this really cool new technology called Solana. It's actually a resonant story. So I think both of those assets are going to do really well. A thing I always say is like, think about the media coverage of those 2 assets. It's like roughly equal, but actually Solana's 1/5 the size. Like 1/5 is a lot smaller. And that's one of the reasons I'm so excited about Solana. I just think it's going to get more than its fair share of flows. I mean, we did $500 million in flows in the first 12 days or something. You know, scaled for Bitcoin, that would have been, what is that? $12 billion in flows in 2 weeks, like on a scaled basis, just an enormous amount of money. I think we think of Solana as much bigger than it is. And that, you know, long term, I still think it's I should say to all the ETH maxis out there, I'm still very bullish on Ethereum. It has the dominant role in this space. I own a lot of Ethereum, but I do think Solana is uniquely well positioned from an ETF flow perspective.
As crypto enters its next phase of maturity, the real battleground isn't price action. It's the evolving structure of ETFs and how they reshape Bitcoin's future. Matt Hougan's latest perspective offers a sharp window into how the next phase of crypto investing will unfold, and from your vantage point, his insights signal a structural shift that Bitcoin investors cannot ignore. Hougan reveals that staking-enabled ETFs, especially those targeting full 100% staked yield, will redefine investor expectations, with Solana serving as the early case study. You find his explanation of Bitwise's liquidity mechanism particularly telling. By allowing market makers to swap locked SOL for liquid tokens during moments of stress, Bitwise effectively solves the core liquidity challenge while preserving yield nearly all the time. This approach, in your view, sets a precedent for the rest of the industry. Hougan's argument that ETF demand will follow a power law distribution also resonates with you. Only a small group of high-conviction assets will attract meaningful flows, while ETFs tied to weaker tokens will fade into irrelevance despite their launch. Most compelling is his emphasis on index funds. You agree that as new institutions enter the space, broad-based crypto exposure will become the preferred on-ramp, potentially making index ETPs the 2nd or 3rd largest category after Bitcoin. And with regulatory catalysts like the Clarity Act gathering momentum, you, like Hougan, see Bitcoin primed for a breakout once fundamentals overpower outdated cycle narratives. Let's get back to the interview.
You've seen some ETFs launch with like half of their assets staked. We think investors want 100% staked. So the way that it works, if you dig into, it's actually page 90 of the prospectus, if someone wants to go look it up, is there's a provision with third-party market makers to exchange locked Solana for available Solana in moments where it's locked for a day and you have these outflows. So there's a provision. There can be a spread in that trade, Scott. It can be a small spread. So you could see like a slight discount in terms of the value of the Solana that you're outputting through this facility. But it's worth it if 99.9% of the time you're staking 100% and gathering the full yield, right? It's just during these moments of stress, there's a provision to make it work. There's a little bit of a friction, but it's not much friction. And we were really excited to put that in place. I think you'll see others sort of copy that as a way to get something close to 100% stake, which is what you want if you're investing, particularly in Solana, where the yield is like 7+, right? Yeah, there's a line, I think it's relatively soon, where there's not that much interest in individual assets. I also think many of these ETFs that are launching will not get any demand, because if the underlying asset doesn't have demand, like if no one wants to buy X, no one's going to want to buy the ETF of X. It's not like magic. So there's a power law of distribution in crypto. I think there are 5 or 6 individual asset ETPs that'll be interesting broadly. There may be 5 or 6 that'll be interesting to specific communities. And then there'll be a lot of slop thrown against the wall that no one will buy, right? I just think they'll sit out there and nothing will happen. End up having zero interest. And then they get shut down in a few years. That's fine. That's healthy, right? But people shouldn't assume that just because you launch an ETF on Bitcoin Cash, a lot of people are going to run out and buy it. Apologies to the Bitcoin Cash people.
Do those exist? I think there's just a couple.
But that's what I mean. Like if no one is buying the underlying asset, if you launched a Zcash ETF right now, people would be buying a lot of it. We thought we were very close right before the government shut down. Everything in crypto is harder than you imagine. You didn't plan to like work on something for 4 years, feel like you're at the doorstep, and then get rugged because of a government shutdown. I'm hopeful that now that we're open, we'll get past the hurdle that it had, which is a weird administrative hurdle where one commissioner sort of raised their hand and put it on a separate list. I think that we will get there. I think it'll launch relatively soon, but obviously the SEC is going to be backed up right now. They're just getting back to work after 40 days out of the office. But I do think index funds will be one of the biggest categories in crypto eventually. That is 100% the way people invest. And that's particularly the way the marginal investor coming into crypto invests, right? The legacy crypto investor has a view on Solana versus ETH versus Cardano versus XRP. The marginal investor coming into the market doesn't know what those words mean. They just want exposure to the space. And so that's going to mean indexes. I don't know if they'll get to be as big as Bitcoin, but I think there's a great argument to be made. They'll be at least the second largest category in the space. So I'm excited to get our product out there, lower the fee, and start talking to people about it, because I think it's where most investors should start. I mean, index is my number one focus. We'll launch more single coin assets. We'll launch single coin assets where there is a community that is very excited about them, and it's a reasonable project. There can be a lot of people who dislike it, by the way. I'm not surprised that the XRP launch is doing well. There's a lot of people who love XRP.
Looking at the current Bitcoin landscape, it's clear that price movements are increasingly influenced by institutional flows and structural products like staking-enabled ETFs, rather than the traditional 4-year cycle. From your perspective, this suggests that periods of consolidation or short-term volatility are less about weakness and more about market maturation. The adoption of full-stake ETFs and the rise of crypto index funds indicate a shift toward efficiency and accessibility, allowing broader investor participation while maintaining yield. You also note that the selective demand for top-tier assets highlights a power law distribution in investor behavior, where only a handful of coins capture meaningful flows. Even with a recent 13% dip, institutional investors appear steady, reinforcing confidence that Bitcoin's trajectory is underpinned by fundamentals. For someone analyzing these dynamics, this environment presents a structural opportunity to position for long-term growth rather than react to short-term swings. Do you think Bitcoin's current consolidation is a temporary pause or the start of a larger trend? If you found this analysis insightful, leave a comment, share it with your network, and subscribe for more in-depth crypto market insights.